new to this.
Absolutely. I'll follow in your lead.
Well, I want to thank you for joining me here. For anybody that's watching, you're Sean Hinds. We're going to get into a couple of things. In this video, primarily, we're going to try and really make this a high value video for anybody that's looking to get a mortgage. So this could be from coast to coast. I mean, we're based out of the Lower Mainland in British Columbia. You're in Lake, I'm in Surrey. This could be really for anybody in Canada. But specifically, what we're doing is we want to help people know everything that we can teach about mortgage. Well, not everything. We don't want to spend all day here. Nor do the people watching this. But we want to make sure we can give as much as we can to help them be successful with the mortgage, and maybe we can also tailor it a little bit to a first-time buyer. So first-time buyers generally are a little bit more green. They know nothing about the mortgage history except what they're told. This is our opportunity as well, from the standpoint of a realtor and the standpoint of a mortgage professional, to be able to help people regardless of whether they even use our services or not, right? So it's kind of cool. So we're going to have a little bit of a conversation today. Is that cool?
That's excellent. Thanks for having me, Darren.
Oh, my pleasure. So I would love to start this off learning a little bit about you just generally, you've been doing what you do for a long time. You got a very interesting background. It's not my story to tell; it's your story to tell. So I would love to know kind of how you got into the financial industry and just kind of what's the story behind all that.
Yeah, I got interested in business at a very young age and everything. My family comes from the Caribbean. When they immigrated to the country, as they began to establish themselves, they became very involved in business. So I've been immersed in business from a very, very early onset. And as I was going through school, I became more interested in it, had some introductory courses, and I had actually interviewed a bank manager when I was a teenager.
You interviewed a bank manager?
I interviewed a bank manager. Now, keep in mind, I was 15 years old.
Okay.
Learning about, the dynamics of the business, her job, how the industry functioned. And it gave me incredible insight. And after that, it inspired me to decide that's what I wanted to follow in my career path. So leaving that behind, I went into that in school and graduated. And now I help people fulfill their dreams of homeownership.
Which is probably one of the most rewarding things about what both of us do, right? Like, it's pretty incredible to see people get into their home, especially their first homes. They tend to care a little bit less as they get older, I find, but that, they're still excited. But it's pretty neat, especially with first people, right? When they get in their first home and just like the emotions that they go through.
Oh, it sure is. And, the big thing is leveraging that expertise to make the path as painless as possible for them so that they can have a really, really positive experience, whether it's on the financial services side or whether on your side as a realtor.
Yeah.
It's really important to leverage that expertise in order for them to have an amazing experience.
I agree. And, one thing I love about you, Sean, is like, you've got this background that's very unique that a lot of people can't, not that you're Jamaican or from Jamaica, that's not what I'm talking about, even though I'm sure you got some great recipes.
We do.
I can imagine. More so because you have a background in the underwriting side of things. So,
yes.
What is an underwriter? Number one, for people that don't know, but I'd love to hear a little bit about that.
Yeah, so a little bit on the adjudication piece. So an underwriter is a person that works for an institution, whether it be a bank or a private lender, that they assess the qualification of a deal in line with that institution's criteria.
Okay.
So a lot of the things that they're going to want to look at is your income, what you're trying to buy in terms of your credit history, the ability to repay debt, capacity, one of the most important things, and overall your history to determine, what will it take to qualify this deal, and does it operate within that lender's risk parameters.
So they're more so there to protect the bank. Like they're not obligated to the person that's trying to get the mortgage or the borrow. They're not there for them. They're there to really protect the bank's interest in a way and make sure that whatever deals kind of brought forward is protecting the bank's interest. Is that kind of correct?
Absolutely.
Yeah.
Absolutely. Because remember, at the end of the day, that institution, they are a business.
Yeah.
They have shareholders, they have investors, they're regulated. Canada overall, we're a heavily regulated industry in terms of our financial services, as the same for real estate.
Yeah.
So predominantly, it preserves the integrity of the business. So we have to have these adjudication standards in place so that we write a good quality business.
Yeah.
The last thing that any lender wants is collapse in defaults.
Right.
It doesn't help anybody. Doesn't help the economy. Doesn't help the market.
Well, that's why your background's so interesting, because you're on the side that, or you were rather on the side that it can be so challenging sometimes when getting a mortgage, right?
Yes.
Like those are those secret people that we maybe don't love sometimes as much, because they're the ones that can sometimes, they're there to protect the banks.
Yeah, they're giving you the yay or nay based on their book policies and guidelines. And you got to remember too, they have a very, very difficult job.
Yeah.
When they get a deal, it's not like how we are right now where we're sitting across a room conversing with each other face to face. When you're an underwriter, you're sitting in, a cubicle in a credit center. All you're looking at is information on the screen or information that's been given to you via document package. But you don't get to see that person, talk to them, get a feel for them, get to know their history, their background, how they've managed their credit. Everything that you're looking at is what's been presented to you. So how that information has been presented, how well it's been pieced together is going to really influence the decision of whether that lender can say yes or whether that lender can say no.
Yeah, that's a great point. Well, actually, two things you said are quite interesting to me. Like, it's probably good that they don't know that person personally too, because that's not what they're there for, right? Like, they need things to kind of make sense on paper. But the second point I was going to make totally escaped me now. But you said something really intelligent, whatever it was, and I can't remember. So it's funny. So I guess we'll move on from that. My great memory. I should have brought that with me. So what's really interesting is you've seen both sides of kind of the lending business, and now you're in the business of helping people get the money. And the other thing was packaging. That's such a critical piece of what people in your roles do, is really packaging the deal for the underwriter so it makes a lot of sense. And what's cool is you know how to do that so well because you come from that background.
Yeah, it's a funny thing. I liken it to going to court.
Okay.
So in essence, you're acting like a lawyer. Your client is the person that you're representing. The bank or lender is the court.
Right.
They have a set of precedents that they operate of. So it's your job to understand those precedents and be able to structure your deal in line with that to present the best possible case to the court and win the ruling.
That's an interesting way of thinking about it. Okay.
Yeah, just kind of different thought process on it.
Yeah. Okay. Well, that is interesting. I never thought about it like that. What about okay, well, why don't we get into a little bit about mortgage basics? So let's talk about mortgages generally. Like, for someone who's buying a home, really high level, what is a mortgage? How's it work?
Okay, so a mortgage is a type of loan that people use to buy real estate or to maintain a property, such as a plot of land, a building, etc. And during the course of the mortgage, they pay a set term and a set payment for a duration of a period.
What's that?
And the amortization represents the life of the life.
That's the full span of the loan. Yeah. Okay.
Correct.
Okay. So you've got this mortgage. People go in. They usually will decide on a term. Term being like, do I want like a 3-year term, 5-year term, whatever that might be. Amortization is the full life of the loan. Huh. So when somebody goes in, I mean, I know the answer to this, but when somebody goes in, are they like they might in the U.S., are they signing up for like a 25-year mortgage at that point, or how does that kind of work?
Depending on their qualification, your standard mortgage life is 25 years. In some instances, a client can go to 30 years, but that's the maximum in Canada.
Right. And then, so that would be the amortization. And usually they would do those in chunks called terms.
Correct.
Right. So what do you see is like the average term most people would take?
The average term would be 5 years.
Okay. Then is there a benefit into them taking a 5-year term? Or I guess maybe it depends on what? Like, why would somebody take a 5-year? Why would somebody maybe not?
It depends really on the client's risk appetite. So some clients in particular, they prefer to have a set term with a constant interest rate with no fluctuation in their payment.
No surprises.
No surprises.
Right.
That gives them the stability to know that we have a set payment, and it allows them to help them with their other budgeting in terms of their kids, daycare, property taxes, car loans, et cetera.
Right.
Having a set mortgage payment, allows them to budget and manage their expenses.
Okay.
Some people just don't like the risk.
Yeah, and then so people that maybe, well, I guess it would depend on their plans too. So like maybe a 3-year mortgage makes sense because you've got something coming up and you know that you're going to maybe have to make a move or something like that. Or why do you find people maybe don't always do a 5-year mortgage? So I know that's probably the most common, and there's also ones that are longer than that, is my understanding as well. Is that right?
That's true.
Right.
Yeah, you can go as long as a 10-year term on your mortgage. In the instance where somebody might elect for a shorter term, per se, might be they have a plan to get out of that property in the next couple of years. Perhaps they've decided to move to a different part of the country. Perhaps if it's an investment property that they are not looking to hold for a long term, and they want to get out of it in a short manner and mitigate the amount of penalties that they would pay in terms of moving into a fixed rate plan, for example. So it all depends on the client's individual purpose for that property.
Yeah, I guess having like the foresight of, and it's hard because I know, well, I think what's the statistics, like 6 out of 10 people don't actually finish the term of their mortgage necessarily. They usually won't sell for whatever reason.
Yeah, that's correct.
So it may be easier said than done to plan long term. But I know, like when I got my first house, I did a 3-year mortgage, and I think I got a 3-year mortgage at that time because I was fairly convinced that I wasn't going anywhere. But after 3 years, my mind might change. Following up on that, I remember I signed a 5-year mortgage because I was for sure not going anywhere. Following up on that, I got into a variable mortgage instead of a fixed mortgage because I was sure that I was probably going to do something at some point. I was married now at that point.
Right.
My wife was going to tell me what was it rather than to my own accord at that point. So why, to that point for people watching, maybe dive in a little bit to like what a fixed rate mortgage is, what a variable rate mortgage is, and why I might have chosen a variable rate mortgage.
Yeah, great question. So a fixed rate mortgage is a mortgage that has a set term.
Okay.
Now, during the period of that term, you stay a specific interest rate and a specific payment, and it doesn't fluctuate.
That's right.
On a variable rate mortgage, it fluctuates based on the Bank of Canada and their policy meetings each month. So your interest rate can move up or it can move down depending on which direction the key policy rate is trending. With that, though, your payment fluctuates. So you have a lot more instability, but on the flip side, you have more flexibility where you're only subject to, per se, a 3-month interest penalty versus, say, a more complex calculation on the fixed rate side of the business.
Yeah, and that's kind of where I was going with that. So the penalties, like when we were talking about, like 6 out of 10 Canadians is the number that I saw anyways, that they, they don't see their mortgage to term. And one of the things that people just need to ask questions about when they get a mortgage is just, what might my penalty be or how is it calculated? Because not that it's good, bad. I mean, when you get a mortgage, you obviously sign a contract with the bank and they kind of expect you to fulfill your side of the contract. It can't be
True.
Way, right? So, but just even kind of knowing that sometimes for people is certainly one of the questions that I know you recommend for people to kind of ask and make sure they understand. And that was the exact reason I decided to go variable at that time, because regardless of when I lost, because regardless of what the market did in between, I wanted to know that I had better management over what my potential penalty might be for breaking a contract. I didn't know if it was going to be 2 years or 3 years or 4 years until I sold. It ended up being 2 years. Case.
Wow.
But certainly knowing that a 3-month interest penalty was a hell of a lot more manageable than what the alternative could have been. That made a lot more sense.
Yeah, absolutely. Because in a fixed rate term, the penalty is generally calculated as the greater of 3 months. So, for example, if you have 24 months left remaining in your current term out of a 5-year fixed, that's greater than 3 months. So you're going to get assessed a more expensive penalty than it would on the variable product. The only thing on the variable product is that you're subsequent to those interest rate swings, which can influence what your payment is.
Right.
And as we've seen over the past year and a half, interest rates have risen astronomically.
I don't even want to talk about it.
Payments have gone through the roof. Rates are at, unprecedented levels.
Yeah.
Probably not seen in the last 4 decades.
Yeah. Yeah, it's been incredible the ride that we've been on with interest rates, and you gotta. Well, I know everybody has to feel a little bit for anybody that's been on that variable rate. I don't know that we've ever seen rates go up that quick. Maybe we have. Certainly not the time in the 17 years that I've been doing this.
True.
But never seen rates move that quickly, and I think it caught the whole industry off guard. Your industry, my industry, everybody.
Yeah, it really did. as with the case, and then not only isolated here to the domestic economy in Canada, but globally. We've seen inflation rise in Europe, the United States, Canada, Asia. It's taken a level that are unsustainable. So it's understandable that these are the measures that they have to take. The bad part is that it hits us in the wallet. We have to front of it until things normalize and stabilize. Now, the great thing is that things are trending back in the right direction. We're getting back towards those sustainable levels, that key target interest rate. We're not there yet. We still have a little bit of ways to go, but the desired effect is having its getting back to where we need to.
Yeah, totally. Yeah, I mean, everything that I've heard in the last couple months, maybe the last month anyway, last couple of weeks, but that in 2024 is going to be looking a lot more positive, not only for interest rates, but just generally kind of some life coming back to the market.
Yes,
people having a little more assurance in terms of what their payments might be, and they're now ideally be a lot lighter, not a lot lighter, but quite a bit lighter anyways than what they
absolutely.
Today. And also qualifying. I mean, that allows people to borrow more money to. I mean, let's face it. We live in beautiful communities. I'm in Surrey and Langley. They ain't cheap. Nothing's cheap, right? So
not at all.
The more that you can borrow for the less in interest that you pay is certainly a good thing.
Well, it sure is. Yeah, and higher interest rates prohibit that by design.
Yeah.
So lower interest rates absolutely are more favorable because as money becomes cheaper, people can qualify for more. They can carry higher debt.
Right. Yeah. Yeah. It's gonna be good when it corrects itself a little bit. So I know we're all looking forward to that.
Absolutely.
I wanted to pick your brain a little bit in terms of like, imagine I'm a first time home buyer. So completely new and green to the process. What does the application process look like? So how do I even start down that road to figure out, can I buy a house? Can I buy a property? What do I do?
Yeah, great question. The first thing you do, you want to open a relationship with an industry professional, whether it be a bank, broker, credit union, whoever your institution is that you deal with, you should open a relationship with them and work out your numbers. You need to know how the mechanics of the business works, and you need to know basically what your price thresholds are, so that you can go out and shop with confidence.
Right. And there's mandated numbers from the government about like maximums that people can borrow, right? So there's the total debt service ratio, and what's the other one?
The gross debt.
Gross debt. And so how do those work? Can you explain those?
Yeah, absolutely.
One of them anyway.
Yeah. So starting with your gross debt service ratio, those are related to your housing expenses. So how it works is it's looking at your mortgage payment, your stress tested mortgage payment, your heat, your property taxes, strata payment if applicable, and measuring it against your income. And it's designed not to go past a specific level.
Right.
So under perfect conditions, it shouldn't exceed more than 39% of your total pre-tax income.
Yeah. Well, even just anywhere in the lower mainland, like number one, yeah, difficult, right? Like, and I'm even just thinking like 39%, that's such a big number.
Huge number,
and difficult to accomplish.
Very difficult to accomplish.
Yeah.
Easier in different jurisdictions, but in a place where we have prices that are so high and people have to take out mortgages that are that much higher, it becomes difficult to meet those thresholds.
Is that what a lot of those online calculators do? Is they just basically say like, you make X amount per year, and we know the total debt or the gross debt service ratios, and roughly this is what you can afford until you actually give us more information.
Yeah, that's exactly right. Yeah, that's exactly right. It's using general input parameters into its system to come out with a baseline figure. To drill down really in depth, depending on the complexity of your case, some people own multiple properties. Everything. So there's multiple mortgages, et cetera, multiple strata payments.
Right.
Rent varies from property to property. So in those cases where a client case might not be simplified, you really need to deal with an industry professional.
So what are your thoughts on some of those online calculators? I don't know how PC you have to be in this, but like, there's a million and one companies out there that want the people watching this to leave their information on one of these online calculators, So they can have, and really, let's be honest, what they do is that if it's for an organization that has people working within them, they'll give it to the people working there.
True.
But if they don't, which most of them don't, what they're doing is they're selling that name likely to the highest bidder in the mortgage industry, I would guess. Anyway, is that basically how those business models work?
In many instances, I can't say with 100% certainty.
Well, yeah, we'll be clear. You don't own one of these calculators.
Calculators.
Business model, you can't necessarily comment.
Yeah, I'm speaking in general from an industry perspective.
Yeah.
But yes, you don't know what happens with the information behind the scenes. In many cases, it's probably more prudent to deal with a place that you're already well versed with and have a relationship, whether it be your bank, your credit union, or an individual broker.
Yeah. Well, I'll tell you my experience in these calculators too is like a lot of the time people will jump on and they'll be very they'll have a lot of what's the word, committed to what that calculator spits out. All right, and it'll give them a number, and they feel that that's gospel. That's how much they can afford.
It isn't.
It's not. No, it's not. And both of us have seen our travels so many times that like people will go out and they'll say, "Well, I know I can afford to spend this much on a house because so and so calculator told me," and they end up number one, they end up burning a lot of time. They burn other people's time too. We've both been unfortunate recipients of that in the past. I think we're a little better.
Part of the job.
Yeah. We tend to ask better questions after you get burned. Burned a few times.
That's true.
But they burn a lot of their own time. They burn a lot of other people's time. They end up sometimes writing offers. They end up spending money maybe on things like home inspections and getting documents from the city, and investing a lot of time maybe reading documents and whatnot, only to find out that they maybe were never even close to being able to afford that amount of money. It's incredible.
Absolutely. And those calculators are great. They have a purpose.
Yeah, they have a place. I agree.
They have a place and they have a purpose, for giving people an introduction to what roughly their qualification looks like based on a simple case.
Right.
Simple case scenario. But if it's a complex case scenario where you're very well established, you own multiple properties, your income structure is very complex in how your earnings work, those calculators might not give you an accurate assessment of what your true qualification is. And that's where you really need to work with an industry professional to really drill down into what your true numbers actually are.
Yeah, I almost see those calculators as like, it's almost like visiting an open house in my industry. Like it might be a good way to dip your toes, and get a little bit of an idea. But when it's time to get serious, there's a better route. And that's usually speaking to a professional.
100%. Yeah, whether it's a financial services professional or a real estate professional. So.
Yeah. You certainly could speak to a realtor as well. I mean, for anybody out there that might not have a relationship with either their bank or somebody that's in the financial services industry that can help them, usually their realtor that they approach, if they've got a realtor anyways, probably has a great recommendation of somebody that they can trust as well. Right.
Yeah.
So actually that reminds me, we've made two things available in this. I'm going to drop them in the chat right now. But Sean has been kind enough to make access available for a document just strictly related to first-time home buyers, right?
Yes.
Yeah. So I've gone through it. It's very, very good. So that is also going to be pinned at the top of the comments in this video for anybody that's watching. Additionally, what we've done, my real estate team and we've got a document where we've kind of sourced out 7, it's actually 8, we just updated it, but 8 government programs or incentives that are out there for people.
Fantastic.
They're kind of buried and they're hard to find. You don't always know where they are. So there's the federal government that does them, and there's a provincial government that offers some as well. So we made those available as well. So if people want to go download that, then they can check out that. And I've added your direct email as well. So if anybody wants to reach out.
Oh, fantastic.
Fantastic. Then we can go ahead and
absolutely.
So I'm applying for a mortgage now. And what are some of maybe the common mistakes that you see when people apply, or what's the number one mistake you see? You can take that whatever way you want.
I'll say the number one challenge that I see, I don't want to call it mistakes because people aren't necessarily versed in how the mechanics of this side of the business work. They just think, I earn an income, here you go. But there's metrics involved in everything because the business is regulated. So there's criteria that, the average consumer is not going to stand. So I think one of the largest things is clients end up making assumptions, like, oh, well, I'm buying this property. It's no risk to you because there's a lot of equity in that property. I'm only asking you for this amount and everything. But lenders are cash flow. Lenders are cash flow based.
Okay.
So I think that's probably one of the biggest things that people come in with unrealistic expectations. They come in with assumptions and everything that don't line up per se with what their goals and ambitions are and align with how the lender operates. So I think it comes down to really finding kind of that middle road.
Right.
I think so that everybody has a clear understanding on each side.
Yeah, no, that's good. Whenever they have the kind of a clear understanding, I mean, number one, we never in both of our industries don't want to set people up for disappointment because it's just terrible for everybody involved, right? But what is some things that someone could do to improve their chances of getting approved for a mortgage?
Oh, absolutely. Do a soft credit check on your credit history. Know what your profile looks like. Sometimes we come into situations that are beyond our control, and it impacts what our credit history is. Because you got to remember, when that underwriter gets your information, they can't see you like how we're conversing right now. All they have to go off is what's on paper.
Right.
So if there's something in your history that speaks negatively to your history and your handling of credit, whether it maybe your fault or not, those things need to be addressed.
How many times, if I gave you 20 people, how many times out of those 20 people would something pop up on their credit that they're likely unaware of?
A lot.
Really?
A lot.
Okay.
Yeah. Whether their information was compromised in some way.
Oh, really, man?
Or a fraud alert on their file 10 years ago that they forgot about it.
Right.
Everything's clean, everything's good now, but there's still this alert that says, hey, my information was compromised or this happened to me X amount of years ago. And now the lender has to go through their due diligence process to make sure that, the integrity of that file is there, so that we know who we're lending to and that we, make a sound, prudent decision.
Right. And I guess even if that's not done, that's really going to slow down the process too.
Slow down the process.
Yeah.
And in many cases, we're in a deadline driven business.
Yeah.
You're at a deadline, I'm at a deadline, and these things, not known beforehand can really delay the process.
Yeah, well, like we really feel it on the real estate side when, especially when people start and maybe they approach the purchase with their realtor, and they haven't maybe gone through all those steps yet, and then they're kind of doing them as they maybe have an accepted offer on a property, and
right,
any delay on that can just absolutely kill a deal. Actually, we just found some buyers, met some buyers recently, and they had written an offer on one of our listings, so they had been approved for a mortgage, but the problem is that they had prior to coming to our listing is they had written a deal on another property and they ended up getting approved. The problem is they ended up getting approved 3 days later than when they needed it.
Mm-hmm.
So they ended up actually, you and I have worked with clients, where you've come in and saved the deal and helped us kind of in that regard because they went through the same issue. They went through the same problem, right? The first person they were with couldn't get it done. They ran out of time. They lost a property. They were very upset, right? So then we would bring you in and you would do it properly rather than the opposite way, right?
Yeah, that's where a pre-approval or a pre-qualification could have addressed all those issues because you would have covered all of those circumstances before going live.
Well, yeah, totally. And so actually that's a great segue. Like what is a pre-qualification versus a pre-approval?
Yeah. So a pre-approval is an actual certificate from a lender that basically says that we've gone through all the due diligence minus the actual property that you're seeking. And we've determined that we can successfully approve you for this or amount X. A pre-qualification is an informal assessment where we've done basically a workup model. We've assessed all of your numbers, but it's been very informal. And that could be given because we weren't able to verify certain aspects of the client's income, or there's other data that was unavailable. So we couldn't give them a formal certificate, but we were able to give them a generalization of, hey, this is what your range is. This is what your parameters look like, everything, but this isn't an actual formal rubber stamp. Yes, you are pre-approved.
Right. So the latter would be the one that people want when they're kind of serious about going out to look for a home.
Absolutely. Yeah. And particularly when they're dealing with a real estate professional, you want to know concrete, like this is what my numbers look like.
Yeah. Yeah. I mean, that's so important on our end too, because it's when you're out looking for a property and you don't know your numbers, like number one, it's so hard to even negotiate with strength because, you're weary that every dollar is going to mess up the situation and stuff like that. Sometimes even we'll ask for what's called like a pre-approval letter to be able to provide to the seller. If we're helping the buyer, we'll provide that to the seller, and it doesn't have numbers on it necessarily, but it just says like these guys have been through the proper channels and they've done the right stuff. This isn't going to be delayed. I as the mortgage professional have confidence that there's life here in getting this done. Which in a market like now, at the dining film list, I was telling you this before we turned on the cameras, like on our listings, where we don't know a lot about the buyers because we're not working directly with them.
Exactly.
It's incredible the amount of buyers out there that haven't gone through the proper mortgage channels and got those pre-approvals done. So they're writing offers and tying up people's homes only to learn, then some are better because they'll let you know right away and try and gracefully kind of back up. It's tying up properties. And of course, how does the seller feel?
Frustrated.
Incredibly frustrating. It's frustrating. And I totally, can empathize with that because it is, they get pretty excited too. They think, wow, the thing goes in their head. They don't think we got to get through all this. They think my home's going to inspect perfectly and everything's going to work out great. And I'm moved already. I was at the right house and then I was spraying.
Yeah. Everyone thinks that their circumstance and their situation is unique.
Yeah.
To everybody else. We all think that.
Yeah.
Our home is the best thing, like our qualification is the best thing. And hey, for the most part, like people are very well qualified today. Like people in Canada are very prudent with how they manage their homes, manage their finances for the most part, but still anything can happen.
Yeah. Yeah.
Times change, regulations change, the market changes.
Regulations change. Like I feel like
on a dime.
It's like been rapid fire over the last few years, right? From federal and provincial and even municipal, like some of the things going on with like even Airbnb. Well, now Airbnbs are like, going to be a thing generally past.
That's right.
That's right. British Columbia, but like even like with municipalities, like speculation, vacancy taxes.
Sure.
And that's, for people watching, that's not even limited just to the stuff that the province does. Like the city of Vancouver has their own rules against Airbnbs. They have their own rules against vacant properties.
Correct.
There's a million things to know now. It's always fun keeping up as a professional.
Yeah, there really is. So I think that kind of really the moral of the story is due diligence. Like never go in, never assume. Like do that pre-work. Work with your professional to figure out like what does your circumstance look like. Once you know that, it just works for everybody. It works for you. It works for the client. It works for the lender.
Yeah, no, that's a great point. I mean, the due diligence and the proper preparation is just like the key to everything. Doing it well.
It really is the key.
Yeah. What about so when a consumer's out there looking for a mortgage, they have a couple choices that they can pursue. Like we talked about the online calculators, and that's usually just a way of providing consumer leads to somebody that's paid for them typically, or somebody that works in the company that's sourcing them.
Yes.
But a consumer typically will have a choice when they get a mortgage. Actually, I guess they got three choices because they can go directly into a big bank branch. Big bank branches sometimes will have people that are there working and actively available to kind of help them with the mortgage.
True.
Oftentimes big bank branches will have what's called a mobile mortgage specialist. And those are usually just, correct me if I'm wrong, those are just like extensions of the branch. They still are, wear the jersey colors and all that sort of thing at the branch. They can just meet you outside of the branch. They can come to your house. They can call you after 5 o'clock if the bank is closed.
Yeah, they sure can.
And then there's mortgage brokers. So what is the difference maybe between, from your lens, what the difference is maybe between working with like a major bank or institution, like a credit union, versus maybe working with like a mortgage broker?
Yeah, great question. So the key difference is that a mortgage broker is somebody that works for an independent company.
Okay.
Now, the key with them is that they have access to multiple lenders. So the advantage to the client is that depending on their circumstance, there is a product out there that might suit their particular needs.
Right.
Something that works for a specific institution, such as a credit union, for example, can only sell you that company's specific products.
Right.
So a credit union A couldn't sell credit union B's products. For example, they can only sell you that company's products.
Right. It's, I guess it's worth mentioning too, that like, there's also limitations on mortgage brokers, as far as I understand. So like, I know as an example, I think RBC is an example, where they don't work with mortgage brokers. So if somebody was wanting to, maybe they bank with RBC and they wanted all of their information to be in one spot, they would not be able to go to a mortgage broker. And I think a few of the big brands are like that. Is that right?
That's true. Yeah. Some of the big brands, they don't deal with independent brokers. A lot of them, they have their own in-house units, everything that handle business on the B or the private side, everything, and they don't engage with individual brokers per se.
Okay. So that's a good thing for people to know. And like when I go to like one of the big players in the banking industry, oftentimes too, like they will usually have maybe promotions or promotional like incentives, I guess, for people to kind of come in. Because really what my understanding is, correct me if I'm wrong, like a mortgage broker can offer choice. They don't have limited choice. They've got choice between different lenders. There's certain lenders that they can't go to. My experience in working with some mortgage brokers, and not all, but in some, is that they don't, in my opinion, they're a big piece of their role is to give choice to the consumer.
Correct.
But they don't always get it. Right. So, I think there's a little bit of a secrecy sometimes, from my understanding anyways, about how they might or why they might direct a client towards a certain product, which, and I think both of our industries have done a much better job, rather, of making sure the consumer is informed. But that's where I see the mortgage broker lose their value, is when they say, this is the bank you should go to. Don't consider, these other ones that I might have access to. And one of the reasons, as my understanding, that they do that is they don't want to fish out a deal from multiple banks only to not work with them and get maybe that pre-approval that we were talking about. So you don't want to send a deal out to 4 different banks and have 3 open hooks sitting in the water still after the client decides to go to one. So I think that's usually a reason that they probably do that as well.
That very well could be. Again, it really comes down to the complexity of the case.
Yeah.
Maybe they've shopped to multiple lenders because one lender's risk appetite differs from another lender's risk appetite.
Right.
So they've cast out the net in a hope that, let's see who's gonna take this deal.
Yeah. And then just, like on the bank side of things, what I know a lot of people appreciate about going to like one of the big lenders or the big banks or anything like that is some of not only having it kind of all in the same spot, which I get. Like, if you got your stuff all over the place, your money, it's, you'd prefer it not to be, obviously, but is some of the incentives. So like, without getting into specifics about, we could probably go all day about some of the big banks and the incentives they offer, but I guess not only incentives, but they probably offer some sort of or specialty programs, I guess. Like I know in the past I've encountered big banks that new to Canada is a great example.
Sure.
Right. Where some of maybe the smaller, are they called monoline lenders?
Monoline.
Yeah. Those are like the kind of ones that only mortgage brokers can go directly towards. Is that
exactly?
Yeah. So some of them maybe offer products like that or nearly competitive products, I guess maybe is a way of saying that.
Yeah, exactly. Some clients may want a secure personal line of credit tied to their property.
Yeah.
Monoline lenders may not offer that product.
That's right. Yeah.
Right. So, in turn, you might have to go to a big bank for that. I think the difference there may be, again, relationship. A lot of times if somebody is going to that big bank, it's likely because they already have a relationship. They've banked there for 20 years. They have their banking, day-to-day banking, they have their investments, they have a relationship with an advisor per se. So it's only natural that they would reach out there to seek their needs for credit.
Yeah. Are you aware, and it might be tough to comment on only because depending on your experience on kind of both sides of the fence between like a major lender and a mortgage broker type situation, is there differences in the way that they're compensated?
They're generally the same. Bank specialists and brokers both working on a commission basis.
Okay.
Yeah, so there really is no difference there.
And who pays that commission, just for the people watching? I know the answer. I think I do anyway.
It depends. Well, it depends.
Okay.
Yeah, it depends. Like the bank is paying the specialist because the specialist is technically an employee of the bank.
Right.
On the broker side, a little bit tougher for me to comment everything because there's various brokerages out there, so their policy is different. But it should be coming from the lender.
Yeah, it's always a good question to ask who's paying the bill. You know, like in my industry, for years and years and years and years, long before I got into the business, there was this saying floating around that it doesn't cost the buyer any money to buy the house, and it's, you know, they don't pay the fee, and it's so wrong, right? Like, you know, the way I kind of describe it to our buyers when we work with is it's not free to buy a house. You know, like when you see homes for sale on the MLS, the real estate fees are typically baked into there. Not always, but typically baked into there.
Sure.
And, you know, if you really think about it, if you're buying the house, well, you say that the seller pays the buyer's realtor. Well, who gives the seller the money?
Who gives the seller the money?
The buyer.
Exactly. The buyer.
So who pays the commission?
Exactly.
Right. So it's always interesting to kind of think about, you know, how that circle of money works.
True.
And make sure, you know, it's important that people understand it anyway. You know, regardless if they use a mortgage broker, go directly to the bank. And same with the real estate professional.
Exactly.
To be honest, they need to understand how everybody gets compensated. What would you say people should look for in the person that they choose to hire to get a mortgage?
Number one thing, experience.
I love that.
Experience, hands down.
Yeah.
Yeah. Somebody whose tenure, they've just completed their certification, they just came into the business, they've been there maybe a year. I'm not saying that they're bad, but they may not have had the amount of exposure versus somebody who's been in the business for 20 years and seen various types of deals, the really hard, tough deals that you really have to noodle to, you know, to work your magic to get those type of deals approved, because you know your product, you know your lender. Somebody who's into the business may not have that level of experience, not because they're bad, just because they just don't have enough tenure.
Yeah.
So I think one of the key things is really, really experience. So whoever it is that you work with, you really want to dive into like, what's your background? You know, how long have you been in the business? You know, tell me a little bit about yourself. You know, being an underwriter, that's a valuable asset to have. Huge asset to have.
Yeah. What I've found as well, and you know, it's hard because everybody needs to get their start somewhere. But I mean, I could tell you story after story after story about working with inexperienced people. And, you know, the amount of disappointment that goes on for the person who's relying on that professional to really kind of get them across.
Oh, yeah.
Right. I wish I could get into some of the stories. I won't, because they're good.
That's another session.
Yeah. Well, that's why we're like, you're so valuable. And I'd like to think that we're valuable too.
Absolutely.
You know, in the real estate world, because you tend to cross over a little bit. You start to understand like how my world works and vice versa and stuff like that. So you kind of start to understand when someone's getting a little bit of smoke blown at them, where you say, oh, something doesn't really seem right.
Well, absolutely. Because at the end of the day, we really are extensions of each other.
Yeah.
You know, I'm indirectly representing you and you're indirectly representing me. So if I bring you a client, you know, that I've told that client like, hey, Darren German, McDonald Realty, that is the representative that you want to deal with. He's honest, he's professional, he's hardworking, he's going to give you 100% A1 service. This is who I recommend to go with. Now, if they come in and they get a bad experience, well, that reflects poorly on me because, hey, you recommended that guy, and vice versa.
Yeah.
You could bring me a client. If I don't give them top service, you know, I could jeopardize that relationship for you, because not only are they the client, You are the client as well too.
Yeah, well, and your business is no different than mine. I mean, referrals are really the lifeblood of our business. I always joke, and not to throw stones at anybody that does this, but I always joke with my clients and say, if you see I usually say ugly face on a bus bench, I said I'm doing something wrong, and I don't want to say to anybody that's doing that. That's just a joke, obviously, but it's such a great way to meet people, because you've got that personal relationship already. It's almost like a warm introduction when you get to meet them. And I always like it too, because there's almost that level of like, I did a good job for Sean. Sean bent over backwards and put his own name on the line to say that we were going to do a good job for his friend. And now, not only am I committed to your friend, I'm committed to you. And there's that.
That's right.
Now, not only do I want to make, this new person happy, I really want to make Sean happy, make sure that he knows that he did the right thing and we appreciate it and we treat it seriously, right? And referrals are just like the gold standard in both of our businesses.
Absolutely. Strength in numbers. It's not it's not you, it's we.
Yeah.
We're a team.
Yeah, no, absolutely.
Yeah. It's all about the team.
What about, and I know this happens all the time in your industry, should people go get a second opinion? So like, I'm going to go, let's say I'll pick two banks from the top of my head. Let's say I'm going to pick Coast Capital.
Okay.
And I'm going to pick Scotiabank.
Okay.
And, I could probably see their rates on the internet and stuff like that.
Sure.
Should I be going and talking and maybe even getting a pre-approval with both? Or, because number one, that is wasting somebody's time that you don't intend to work with. Yeah, right. Which I don't think anybody probably gets into it wanting to do, but I think a lot of people probably end up doing it. Should we be getting a second opinion? Like, what are your thoughts on that?
That's a tough question.
Yeah.
I would say a second opinion in the event that you have a really tough situation, that you're not confident with the answer that you got from lender A, then perhaps, maybe you could pursue lender B. But if they're the same type of lender with the same type of parameters, likely the answer is going to be the same.
Yeah. Yeah. Like bank one and bank two. It's like
bank two, the answer is going to be exactly the same because they're looking at exactly the same thing.
Yeah.
It's the same information.
Yeah.
Right. So,
does it hurt people? I've heard this, and I don't know that it's true, and I don't know if you're able to answer it or not. But when I go to bank one and bank two and both pull my credit, is that a disadvantage for me as somebody?
It is. It puts a hit on your credit report, your Equifax or your TransUnion.
Right.
So what happens is the system logs all the inquiries that you make, even if you didn't open up an account with that institution, there still is a log of you making that inquiry. And cumulatively, the more that you add and the frequency at which you add, it can impact your credit score. So think your credit score like it's your coat of arms.
Okay.
When a lender looks at that credit score, they're kind of really measuring like your credit worthiness, like how much risk is associated with you as a client based on that 3-digit credit score. And that's derived based on your inquiries, your history, etc., how long the duration that you've had your accounts. So multiple credit hits, multiple institutions is not necessarily a good thing.
Yeah, that's interesting. I never really knew that.
Like in particular, and this happens to me all the time. Client comes to me. Client just came to me recently. Sean, wanted to get a second opinion. I was just declined by my lender. Oh, okay. Can you tell me what happened? What did they uncover? Tell me about your case. And as you dive into it, you can already generally assess that, this is not going to work before you even have to pull that credit report and put on a necessary hit on that client's file. You can talk through it, find out what the circumstance is. You can already tell if you're an experienced enough lender whether it's going to fit in your wheelhouse or not.
Right. Yeah. Okay. Let's jump into market trends a little bit.
Sure.
What have you seen, or have you seen any kind of significant shifts in the last couple of years in terms of getting a mortgage? I mean, I've got my perspective on it, but I'm curious to hear what yours is.
Okay, I'm first up.
Yeah, you're first up. Yeah, you take it.
Well, as we've seen tighter regulations over
just a little bit,
just a wee bit, just a wee bit.
Yeah.
And yeah, it's taken a lot of the gusto out of the market and everything because it's made it very challenging.
Yeah.
We're looking at interest rates that have not been at this level for over 4 decades.
Yeah.
It's not uncommon that we've seen 6 to 7% interest rates in the past. That part is not uncommon. What's happened is the homeowner today, the new homeowner, has not been faced with this type of rapid ascent in rates ever.
Yeah.
It's the first time that they're actually seeing this. So this is a big shock. Even though that mortgages have been stress tested, we've set them to stress test at this level. But you got to remember, it's not only the mortgage that went up. Your car loans are expensive. Your credit cards, your lines of credit.
Right.
The municipalities have passed double-digit property tax increases. These are big burdens on households. Not to mention the changing market dynamics. Differing housing policies in Vancouver, in Langley, Abbotsford, Surrey, for example. These have carried a big weight on households, so it's changed the dynamic quite significantly.
Yeah, well, yeah. I mean, even actually provincially. I mean, currently at that time of filming this, I mean, the provincial government's like on rapid fire with new policies and regulations coming out with housing too, right? I started selling real estate in 2007, and I remember back in those days that you could do a 40-year mortgage.
That was one of my very first mortgages. Was
40-year mortgage with zero down.
Yeah,
right.
You're right.
Oh my gosh, that seems like a million years ago.
Yeah,
and so foreign that like we would have allowed that.
Most people probably wouldn't even remember.
No,
that we had that. It was very brief.
Yeah, it wasn't a long time.
Yeah,
and I remember people that were in their homes, and like oftentimes when people buy into like a condominium, as an example,
true.
Not all the time, but most of the time that's kind of their first property. And maybe they're single at the time and they ended up partnering up with somebody and they want to go buy a bigger place, maybe start a family, whatever. So I remember some of the people that had gone into those scenarios, and after the first 5 years had gone by, because of the way the mortgage is structured, those 40 years, they had barely any equity in their properties, right? And this is the time, due to popular demand, prices don't always skyrocket up, right? This is during the time Baker is they probably bought it in around 2011, 2013 or something like that, whatever the date was, or actually it was earlier. But the values hadn't really gone up substantially. So in the terms of when the equity's not like super growth mode, they had no skin in the property, right? Nope. And so I mean, I think it's great, even with like some of the stuff that's happened, like with the stress tests and stuff like that. The stress test has been a blessing for the market. If you think about
it. It has, because it's kept things from turning into a runaway freight train. We saw what happened in the United States in 2007, 2008, like, gangbusters, and then the bottom falls out of your market. We're a lot smaller country. Geographically, we're a very big country, but population-wise, we're a very small, very, very small country. And in terms of that, we can't have catastrophic shocks to our economy as they can across the border.
Right.
We have to manage it a lot more diligently to preserve the integrity. So you're right. The stress test has had a lot of beneficial effect, to keep kind of things in check.
Yeah.
Because if not, like prices would spiral out of control forever. You can't have that.
Yeah. Well, look, even when we've seen like, adjustments in the prices in the market and stuff like that too, like, we could have gone in a very different direction in terms of like, monstrous recession and stuff like that. I mean, that really protected people because, and I know it's not popular and it gets talked about all the time in the news and stuff like that, because nobody likes when their affordability is limited, right? And I wouldn't even say it's limited. It's just, that's been the rule for a long time now. So, I mean, it's just what it is. But, nobody really loves that idea, but like the idea of making people qualify at a higher number, if that hadn't been in place back during COVID, when people were getting mortgages for 1.5%, 2%, and they're going to go off and renew, and they didn't get stress tested. I mean, holy smokes, would they ever be in trouble when they're looking, or even people that got on the variable mortgages, right?
That's right. Like, you're staring down double.
Yeah.
Double-digit numbers. It's scary.
Yeah. So thank goodness. I mean, those people, at least we know, were financially qualified to spend at least about 2% more than whatever mortgage they kind of got into at the time, right?
Yeah, absolutely. Yeah. So by design, it served its purpose.
Yeah.
To be able to keep the balance in the market. If you don't have those checks and balances, then the train just runs away. And that doesn't work for everybody. I'm a firm believer that everybody in this country should have the right to home ownership. There really shouldn't be any limitations, but if it becomes so unattainable to a point that, you just give up, well, then what do you do?
Yeah.
Like we've prided ourselves, over the last, 50, 70, 100 years or more, owning a home is a sense of pride. It's almost a rite of passage.
Yeah. It's been interesting to watch the landscape and the conversation change on that. Even the conversation about we need to maybe even change the stigma about being a renter, right? And I don't want to suggest that there's anything wrong with people that rent, but there's that stigma that you haven't made it if you're not a homeowner.
Yeah, and you know what? That's a great point. And to touch on that, renters are not bad people.
No,
they're not.
I've had some bad renters in my client.
Okay. No, another session. First session, but
they get a very unfair reputation often, and they get painted with a broad stroke brush.
They do, but there are many good renters out there, many who are professionals.
Yeah.
They've recently, relocated, they don't know exactly where they want to put down roots at that point. So they need to rent, or they just don't qualify to buy, but they're in a very good job. They earn very good money. They just don't earn enough to put themselves in position for home ownership. And that can be a factor too of, how much they saved or how much they have available capital to work with. But renters have a place as well too.
Yeah, they definitely do. And even there's a lot of conversation coming out about landlords, and I know from like my industry perspective, you imagine this landlord. I did a video on our YouTube channel actually, and I did a thumbnail of the landlord. I have them with a scepter and a crown, and everyone thinks landlords are like these huge like investor conglomerates and stuff like that.
Oh,
realities.
They're not.
Oftentimes, and you and I have shared clients like this in the past as well, where they're the mom and pop, like, they've worked all their life to pay off their mortgage. Maybe they've now been able to, afford that investment property, that rental income. They're making a home for somebody to rent. It's available for them.
Absolutely.
And you want to encourage those people to stay in the market, because you take them out of the market, well, still that rental stock goes with it, right?
Well, absolutely. And Darren, as well as I do, we just don't have enough places for people to live.
Yeah.
We have a shortage of housing. We've had immigration now at unprecedented levels, and more people are coming. We need to start building. A lot of logistics we need to figure out. We need to figure out infrastructure. We need to figure out schools, transit. There's a lot of moving parts in it. You can't just build a bunch of properties and not have the supporting infrastructure to support it.
Yeah.
Everything. So there's a lot of things to work out, but bar none, we don't have enough homes for people to live in.
Yeah, it's a challenge we're going to be shouldering for the next decade, at least.
A few years, yeah.
Which means it's a great time to buy a house if you have the opportunity.
And to that point, people come to me all the time and they say, Sean, should I buy or should I wait? Should I sit on the fence? And I tell people, in this economy, in this market, in this time, there is no perfect time. If the conditions, if you're in a position, go for it.
Yeah. It's there's a famous saying about I don't know who said it, so I won't try and pretend like I do. But when's the best time to plant a tree? Well, it's 20 years ago. What's the second best time? It's today. Right. So I do that with buying a house as well. Let's chat real quick about refinancing. What is refinancing? Why would somebody do it?
Yeah, so refinancing is somebody who currently has a mortgage that needs to restructure it, and could be for any number of reasons. It could be a marital breakup. It could be consolidation of debt. In most instances, people want to refinance because they want to restructure their finances to give them more cash flow relief.
Okay.
To reduce the amount of payments that they're making per month, to reduce the amount of interest per se that they might be paying on their various credit products. Refinancing can really help in that regard.
Yeah, there's a slogan that's date the rate, marry the house. I'm sure you've probably heard that.
You got it.
And the reason that's a slogan or something that people say, and it's actually really intelligent, because the rate doesn't last forever, right? We talked about terms of rate. If you do a variable, it fluctuates, whether it's up or down, but it certainly doesn't last forever. Whereas not the whole lasts forever, but it's certainly a lot longer than whatever your mortgage terms might be, or the rate that you're paying. But the difference is, a lot of people that I find that they wait to get into the market, and they wait, and usually the growth of price of real estate, at least in our area, exceeds people's ability to save. Like, they can't save as quick as the market goes up.
No.
Yeah, that's been pretty across the board for probably about the last 20 years. And there's fluctuations in between. And
they're happening.
Yeah. And if we have a crystal ball and we can say, wow, I bought at the low and sold at the high, I'm brilliant, right? But usually that's just straight luck.
That's luck.
Just luck. Those people, the challenge about waiting to get into the market, like if you're a renter and you wait, you wait a year, you wait 2 years. Number one, you're paying your hard-earned money over to a landlord. So I'm not paying their mortgage. But usually the property values have climbed, not always, but usually.
True.
And the problem is the longer you wait, you don't get to enjoy that growth of the market.
Correct.
You don't get to enjoy the growth of the market. And when it comes time, if you want that dream house down the road, you don't get that usually on the first shot, right? Like, you need to trade up. You need to get that first condo and, work like hell to pay that mortgage down. Then one day you've got enough equity to trade that up. And ideally the value's gone up because the market's gone up as well. Exactly. And you trade that up into the townhouse, and then you do the same thing, and you do the same thing until
you work yourself up the property ladder.
Yeah. I mean, it's been difficult, I think, for the millennial generation to kind of see it through that lens, only because when their parents were their age, they were buying detached homes in brand new communities, and and those parents will sit you down and about how they were paying 18% or 24%, whatever the crazy numbers were.
I know.
Yeah. We've all had the talk, right?
We've had that talk.
Yeah.
I remember my grandparents, back in the 1980s, mortgages were double digits.
Yeah. So, I mean, we've all been through that talk with parents and people from that generation. But yeah, to me, it's you got to be very, very cautious about waiting. There's never a perfect time.
There isn't.
But I would say, today is probably better than tomorrow for most cases. And I think most people would agree with that, because that's how so many people built their wealth, is just simply by owning real estate and holding
property ownership.
Yeah,
absolutely. Yeah. Wealth is rooted in property ownership.
Is there any drawbacks in refinancing?
There is. Yeah. In some cases, when you appear at the point where you are refinancing, depending on the conditions of the market, rates could be higher. So you could be restructuring and your rate could increase.
Ooh, okay.
Yeah.
All right.
There's other instances where your credit might not be favorable, depending on what your circumstances.
Oh, right.
You may not qualify for the refinance.
Okay. Let's kind of circle this back to first-time home buyers now. So just as a reminder, in the chat or the comments, I'm going to pin a link to your information.
Sure.
And in there, you're gonna, it's got your email anyways. And what people can do is they can reach out to you and request your first-time home buyers guide, which again, I found it incredibly useful, especially for somebody who's completely unfamiliar with the process.
Absolutely.
Yeah. So you made that available. So thank you. Also, for anybody that's buying, we've made available a document where we've kind of collected all the hard to find government incentives, whether it's federal or provincial.
Oh, great.
Actually, the document's called 7 government programs, but there's actually 8 in there now. We just added one. But there's tons and tons of money to either be saved or to be prevented from spending that are, how to find them and address them and that sort of thing in this document.
Fantastic.
So that's a resource available for anybody that's watching this right now. What specific advice do you have for a first-time home buyer through the lens of getting a mortgage? Is there anything that you would want them to know?
I sure would. Yeah. Number one, get your ducks in a row.
Yeah.
And when I say that, I mean, when you're just starting to venture into the market, you're getting ready to get that first property, engage with a professional, engage with a realtor, start to get a sense of what it is you're looking for. Many people have no idea, what kind of product they want, whether they're married, whether they're single. Figure out what it is that you want. Engage with a financial services professional. Now let's work out your numbers. Let's get that pre-approval in place. Let's figure out how much down payment that you're working with. Let's see what your credit looks like. And most importantly, down payment. The larger the down payment, and I know this is a tough thing for a lot of people.
Yeah.
There's so much money to go around, but the more down payment you have to work with, the better.
Yeah, absolutely. Yeah. And I mean, there's been some vehicles. I mean, we're not going to get into it on this, but I mean, the personal savings account, which is actually featured in that document that I mentioned as well. But I mean, I know that
Great product.
If anybody
Great
wants
product.
information on that, they can reach out to you. It's a cool product. It's something that's relatively new. I haven't personally had a lot of people I guess savings programs. So
It's a savings
probably it's going to take a couple of years for it to really see its effects, I guess.
It will. Yeah. It will. Yeah. Similar to the TFSA, it's another savings vehicle. Yeah. And the most important thing I would have to say is debt. If you're looking to purchase a home, you need to mitigate debt and carry as little debt as possible. So if you're going out to buy a property, don't take out massive loans. Don't rack up your credit card debt. Don't rack up your lines of credit, because all of those calculate into your debt servicing when a lender is looking at your portfolio.
Right.
Lender's looking at capacity, the ability for you to repay that debt. That's one of the most important things. So carrying a lot of debt is not a good thing. It's not advantageous in the client's
Yeah. What about people are so laser focused on the rate,
Yes.
right? What would you say about that? Like the rate's important. I mean,
Rate is important.
What you're going to pay is important, but
Absolutely.
I find sometimes in my industry, and I get a unique perspective on it because
Sure.
I don't care what mortgage they pick. I want the best thing for them, but it's got nothing to do with
Absolutely.
me, right? So, I find oftentimes they're tripping over themselves to save a 0.1%, which is really, in the grand scheme of things, it's really quite minimal. It's quite minimal. And, and I feel like oftentimes they focus on the wrong things with those. Like there's promotions. I think most banks have a year end. Is it end of October? Usually?
Generally.
Yeah, I think the fiscal year is
Yeah. And
so you see a lot of these promotions come out often at these times. And some of the products that get released sometimes are maybe, there's stipulations in them that maybe aren't always advantageous to the people, and they
Sure.
maybe don't know that. So, but they focus on the rate, right? So it's this incredible rate, that's kind of the hook that draws them in, and they kind of go in. So if I'm a first time buyer, and I am very rate sensitive, what advice would you?
Rate is important. Not going to say that it isn't. Rate is important. It determines how much you're going to end up paying. But one thing to keep in mind is that you're right. A variance of between 10 to 20 basis points doesn't equate to a massive difference. Psychologically, it might appear so on paper. The thing that you want to understand is that every lender has what's called prepayment privileges. Variable mortgages have prepayment privileges. They're generally 20% of the original loan amount. Fixed rate mortgages are originally locked at 10%. So if you got the money, you can throw down chunks on your mortgage every year and pay off your mortgage faster. Just because you take a 30-year loan doesn't mean you have to take 30 years.
Right.
If you want to focus and get aggressive, I've seen people pay off their mortgages in 15, 20 years, and say that's how you save money down the road.
Yeah. I remember when this is almost like an equivalent story. I remember I was getting the windows redone on my house, and I had two window companies come in, and one was offering their kind of own internal rebate. It was really just like $1,000 windows cut down to $600, $400 off. That's just the marketing technique more than anything. But I couldn't wrap my head around this one company whose windows didn't qualify for the provincial rebates. They didn't meet the energy savings threshold.
Yes.
And it was in every single characteristic a superior window to the one that had the rebate.
Really?
It's a rebate. And I remember at the time struggling so much wrapping my head around that I was going to buy a window that had like 0.1% of a difference in terms of its energy rating.
Sure.
And I went for the less superior window in terms of quality,
Right.
which is bizarre. And in hindsight, I'm looking at that. And that reminds me a lot of mortgages, right? Would I ever know get, on a heating bill? Probably not. Right?
not.
And I already know. Yeah, I'm not going to do it.
Exactly.
Right? But, what I do know is, the company that I ultimately worked with, I might have had a better experience with the other company. I would have a longer term, better quality, because the seals are all probably going to, there's probably,
Absolutely.
but it's funny how hung up we can get on those little things. And really, there's so much more of a bigger picture to pay attention to.
Well, Darren, everybody wants to save money.
Yeah, 100%.
It's a natural human instinct. And yeah, you might look and you might be just laser focused on, hey, lender A is giving me X, lender B is giving me this. But the thing that you have to look at is, what am I not getting with that cheapest, lowest rate? Because you got to remember, you get what you pay for.
Well, 100%. And I have kids anyway. The door's open in the winter anyway to the backyard. No one knows to open it, right? So the quality of windows probably
is now
the energy efficiency.
Yeah, I had a client a number of years ago that was with a monoline lender. Yeah. This is a number of years back. And the client had an investment property. And that client was looking to take that property out of their personal name and transfer it into a newly registered number company that they formed, because they had multiple properties. And the monoline lender said, no, we gave you that interest rate. That was the best that we could offer, but we don't have the resources to be able to facilitate that for you. We don't have the capacity to do that. And that client stuck.
Wow.
They were stuck until they hit maturity, until they could then now take a mortgage and go someplace else. But just because you went for that cheapest person on the block, you get what you pay for.
Yeah. I've seen that again and again in my industry, in your industry. Like, you get what you pay for, and you get the experience that you pay for too. Back to you, right? Like, that's such a crucial part in both of our businesses. That, I mean, when you're lending people money, it's not usually a little amount. It's usually, I know that's large amount, but it's usually a big one.
Large amount.
When I'm helping people either buy or sell homes, I mean, geez, the average property, if you mix all the condos and townhomes and detached homes into a big blender, I mean, it's about $900,000 on average. That's a big chunk of money.
These are the largest financial transactions that most people make in their lifetime, is buying and selling property. Yeah, bar none.
Yeah, it's you certainly get what you pay for. What I wanted to kind of bring this to wrap it up a little bit. So there's been a ton of changes in the mortgage industry, and as well as my industry, as well as the housing industry. If you had to make a future prediction, next 5 years, next 10 years, is there anything that kind of comes to mind? Anything that you see coming down the pipe?
Yeah, great question. Tough to predict, because this industry is a moving target.
Yeah.
The rules change constantly, and they change because the government and the market adapts to changes. They try to mitigate those changes by introducing new policies. So it's pretty tough to say what the industry will look like 5 years from now, but I definitely think that we will still see significant price pressures based on the amount of housing supply that we'll have.
Definitely.
Affordability will be very pressured on households, everything. So to me, I think things are going to remain as they are.
Yeah.
We'll trend upwards, but I think that we'll have a lot of pressure.
Yeah, I would agree with that. It's we're not getting out of the current situation that we're in easily. It doesn't matter what government's in power. It doesn't matter what policies are introduced. Like, we're just in a tough spot in terms of the amount of housing we need, and just what's happened around the world, not limited to Canada.
Not limited to Canada.
Cost of living.
It is.
Yeah.
It's no different wherever you go. It's expensive.
It is. Yeah. Well, Sean, if somebody watching this wants to get a hold of you, the best way to do that would be the email that we'll make sure is in the description of the video.
Yeah, email will probably be the best way.
Okay, awesome. And again, if they want to take advantage of your document that you provided for first-time home buyers, it's a great document, as I've said. The link to get our government programs document is going to be in the chat pinned comments as well, and we'll leave it in the description as well. If there's anything that we haven't covered, is there anything that you want the universe to know before we kind of wrap this up?
Yeah, absolutely. Is don't give up. There is opportunity for everybody. I know that it can appear daunting to a lot of people, but don't give up. Find a way to organize yourself, find a way to put your situation in order, work with the right professionals, leverage their experience. They're there to help you. We're here to help people fulfill their dreams and make their dreams a reality. So I'd say stay the course, do what you need to do, and the good things will happen.
Well, it's awesome. It's very nice.
Yeah. I want to thank you really much for having me here today. It's been a fantastic experience.
Yeah, well, I appreciate that. And I mean, I want to appreciate you too. You've always done such an incredible job for anybody that we've been able to work with together.
Thank you.
You're a stand-up guy. I trust you deeply, and I know you're always going to do the right
thing. You as well, my friend. Whatever smell. Yeah. I know.
Anybody that comes back has always a raving experience working with you. So whatever you're doing, keep doing it. I don't know what it is, but obviously you're treating people very well.
If it ain't broke, don't fix it.
Yeah, exactly.
Yeah, you as well, Darren. Yeah, like all the clients that we've shared and exchanged, your team has handled them impeccably. Your due diligence, your well-meaningness, your hard work and stuff was just translated into amazing experience for the clients. They can't rave about you enough. So thank you very much for what you do.
No, I appreciate that. All right. Well, we'll thank you for that, and we'll sign off. Thanks for watching. Anybody that has been on the show here, and if you want to reach out, Sean's contact is below, and please take advantage of that. Okay. Thanks for watching, and we'll see you on the next one. Cheers.
Thanks very much.